Okay, so I want you to picture this. It's a Tuesday morning, the sun's shining, you've got your coffee, you're feeling pretty good about things. You've checked your portfolio, your retirement plan is, on track. You feel like a rational, sensible adult. You've read the books, you know the rules, buy low, sell high, hold for the long term.
The picture of financial zen, right?
Right. And then a notification pops up on your phone. Breaking news. Maybe it's a border crossing. Maybe it's a missile strike. Who knows? And suddenly the futures market just turns deep, deep red.
And that coffee probably doesn't taste so good anymore.
No, it instantly turns to acid in your stomach. And here's the crazy part. In that one split second, all that logic, all those spreadsheets, they evaporate. You're not thinking about risk-adjusted returns. You're sweating. Your heart is pounding. And you have this overwhelming physical urge to just open your app and sell everything.
And make it stop response?
Exactly. So why does that happen? Why do we, as smart, modern humans, turn into these irrational disasters the moment the world gets scary? That's what we're unpacking today. We're looking at a really fascinating piece from Quirky Journals called War Economy, Chapter 5, Fear, Uncertainty, and Markets.
And I love this source because it kind of pretends to be a finance article, but if you actually read it, it's not.
No.
Not really. I mean, sure, it talks about markets.
Yeah.
But this is really a neuroscience paper that's just disguised as investment advice. It's not looking at the software of the market, PE ratios, earnings reports. It's looking at the hardware.
The hardware being our brains.
Specifically, the glitches in our brains. I mean, it's an exploration of why your own biology is actively trying to sabotage your retirement fund during a crisis.
Yeah.
And why that's actually, well, biologically speaking, it's not a malfunction. It's a feature.
A feature that costs us a lot of money.
Unfortunately, yes. Evolution, it really doesn't care about your 401k.
So our mission today is to get under the hood. We're not predicting who wins the next war. We're not picking defense stocks. We're going to figure out how to stop our own nervous systems from making us poor.
Sounds like a plan.
Okay, so let's start with the core mechanism. The source uses this phrase, the amygdala hijack. Now, I've heard this before, in self-help books, usually about road rage or something. But how does this apply to my stock portfolio?
Well, to understand this, you have to look at how the brain is structured. And this is a bit of an oversimplification, but think of it as having like two drivers. Up front, you've got the prefrontal cortex. That's the CEO.
The responsible adult.
Right. The CEO handles the complex stuff. Math, logic, weighing pros and cons, thinking about the future, all that. When things are calm, the CEO is driving the car.
Okay.
But deeper down, you have the amygdala. This is the ancient primitive fear center. And its job is simple. Keep you alive right now. Not in 10 years. Right now.
The don't get eaten center.
Precisely. And the source makes this great point. Evolutionarily, the amygdala is optimized for the savanna. If a saber-toothed tiger jumps out of the bushes, you do not want your prefrontal cortex to kick in. You don't want to stand there calculating the tiger's trajectory or the risk-reward ratio of climbing a tree.
Right. Based on the angle of the sun and the tiger's muscle mass, I calculate your lunch.
Exactly. You'd be dead before you carried the one. You want a system that just bypasses logic entirely. You want run now, ask questions later. And that is the amygdala hijack. When a threat is detected, the amygdala literally cuts the power to the logical brain and takes the controls.
It pulls the emergency brake on logic.
And slams on the gas for reaction, which is great for tigers. I'm glad we have that wiring. But the article argues this is a complete disaster for investing.
Because the stock market isn't a tiger.
But your brain doesn't know that. That's the problem. When you see war in Europe on the news, your amygdala interprets that threat in exactly the same way. It screams, run. And the market running means selling.
Usually at the worst possible time.
Right. So when you feel that panic to sell, that gut feeling that feels like intuition or something, that's not you being smart. That's you hallucinating a tiger.
Essentially, yes. It's a biological mismatch. And it's not just a feeling. The source dives into the chemistry here, specifically cortisol. And this was the part that really kind of scared me.
The stress hormone. We hear about it all the time.
We do, but we usually use the word stress so lightly. The traffic is stressful. The source is talking about a full-on biochemical flood. When war erupts and that news hits, cortisol just floods your system, and it physically alters how you process information in 3 really distinct ways.
Okay, let's break them down. What's the first one?
First, cortisol creates tunnel vision. It narrows your focus to immediate threats. It makes long-term thinking physically impossible.
So if I'm trying to think about my portfolio in 2035, my brain just rejects it.
It can't prioritize it. The biological signal is the danger is 5 feet in front of you, focus on that. It deprioritizes anything that isn't about immediate survival.
Which explains why in a crash, nobody cares about dividend yields 5 years from now. They only care about the big red arrow today.
Exactly. Second, it amplifies negative information and filters out positive signals.
Oh, I've definitely felt this. This is doom scrolling, right?
Ah.
You're scrolling and you just fly past 5 neutral headlines, but you stop dead on the one that says nuclear escalation.
You literally don't see the good news. Your brain is filtering for threats because that's what the amygdala thinks will keep you alive. But the third effect is the most dangerous for investors. Cortisol creates a compulsion for action.
Action bias.
Yes. High cortisol levels make sitting still feel physically painful. Your body is revving up to fight or flee. It needs to discharge that energy. So doing something, even if it's a stupid trade, even if it's selling at a 20% loss, it feels chemically better than doing nothing.
That explains so much. I remember in early 2022 when the Russia-Ukraine news broke, I was sitting at my computer just feeling like I had to click something. I had to move money just to relieve the pressure.
That's the cortisol talking. It's screaming, don't just stand there, do something. And the source actually uses that exact time period as a case study. Do you remember what happened to European stocks?
It got hammered.
They got decimated. The source calls it the cortisol dump. Investors just sold Europe. It didn't matter what the company did. The logic was just, Europe is near the war, sell Europe.
Even if the company was, say, a pharmaceutical company in Portugal that had nothing to do with the gas supply.
Exactly. And the investors who managed to keep their biochemistry in check, they looked at the rubble and said, wait a minute, this company is trading at half its value and its earnings aren't affected by this war at all. They bought when everyone else was panic selling.
Because the crowd was just trying to make the cortisol stop.
Right. They paid a premium for emotional relief.
That is such a cruel irony. The moment your body is screaming at you to act is usually the exact moment you should sit on your hands.
Yeah. It is the central paradox of wartime investing. Now, I want to move to this idea of the fear cascade. Because the article suggests this isn't just random panic. There's a predictable pattern to how we all freak out.
Yes. The source outlines 4 distinct stages. And once you hear them, you'll recognize them in almost every crisis you've ever lived through.
So walk us through this. What happens first? The news breaks.
Stage 1 is shock. This is the freeze response. It lasts hours, maybe a couple of days. The source notes that you actually see weird market patterns here. Sometimes markets even rally for a bit because people are just processing. They can't believe it's happening.
It's that surreal feeling. Surely this is a mistake. Surely diplomacy will work.
Exactly. It's denial. But then comes stage 2, panic. This is the danger zone. This is when the reality sets in, the news cycle goes 247, and cortisol just peaks. The amygdala is in full control. The source says this is when the sell buttons get pressed. Rational analysis is, it's gone.
This is the capitulation phase.
Right. You're selling low because you're terrified. Then comes stage 3, paralysis. This is the swing to hopelessness. The panic burns out, and it's replaced by this heavy, doom-laden depression. Investors convince themselves the situation is unfixable. They think, the world is ending. Why bother?
Stocks are dead. I'm just going to hold cash forever.
Exactly. And the tragedy there is that they miss the recovery. While they're paralyzed, the market usually starts to price in the new reality and creep back up.
Which leads to stage 4.
Gradual recalibration, cortisol normalizes, your rational brain comes back online, you look around and say, okay, maybe the world isn't ending, maybe I should buy back in. But the tragedy, as the source points out, is that the damage is already done.
You sold in stage 2, you sat out the recovery in stage 3, and now in stage 4, you're buying back in at higher prices. You successfully locked in a loss.
So the key insight here isn't about being fearless. It's about recognizing which stage you're in. Successful wartime investors aren't robots who feel no fear. They just refuse to make irreversible decisions during stages 1 through 3.
But it's so hard to do that alone, isn't it? Because we aren't just fighting our own brains. We're fighting, well, everyone else's brains too.
The herd.
The herd. The source dedicates a whole section to this. Why is the pull of the crowd just so strong?
Again, you have to go back to the savannah. We are social creatures. If everyone in your tribe suddenly starts running toward the cliffs, you don't stop and check if there's actually a lion. You run.
Because if you don't run, and there is a lion, you're dead.
Right. The cost of being wrong on the savannah is death. The cost of following the herd unnecessarily is just feeling a bit silly. So Evolution rewards following the crowd.
But in the market, running when everyone else runs is usually destructive.
It is. The source calls this the illusion of safety. There's a psychological comfort in losing money alongside everyone else. It feels less painful than losing money alone.
That's a really interesting point. Can you unpack that a little?
Sure. Imagine you hold your stocks while everyone else sells. The market drops. You feel like an idiot. You feel isolated. You feel like you made a specific mistake. But if you sell because everyone else sold and you lose money, well, you can say the market crashed, the war happened. It wasn't your fault. It was a global event.
So we use the herd as emotional camouflage.
Exactly. We would rather be wrong together than right alone. Being a contrarian standing against the crowd, it triggers actual pain centers in the brain. It feels dangerous.
And the source mentions the gold rush as a perfect example of this.
Oh, the classic move. War started, buy gold.
Everyone knows that one.
Everyone knows it. And that's the problem. The text notes that by the time you, the retail investor, feel that urge to buy gold, the herd is already there. The fear premium is priced in. You're buying at the top because you're seeking safety, not value.
The real opportunity was likely weeks earlier, or in a completely different asset that the crowd is ignoring because they're all too busy looking at gold.
Exactly. The crowd is almost always wrong at the extremes.
Okay, so we've got our own amygdala hijacking us. We have the herd dragging us toward the cliff. And then we have the amplifiers. The source spends a good amount of time on the role of modern media and cognitive load.
Yeah, this is where the modern world really throws gasoline on the fire. The source argues that 247 news shifts coverage from economic analysis to, well, emotional manipulation. Death tolls, explosions, constant loops of disaster.
And it brings up the availability heuristic.
Yes, this is a psychological trap where we judge the probability of an event by how easily we can recall examples of it.
So if I can easily picture it, I think it's more likely to happen.
Exactly. The source gives a specific example. If you see the same footage of an explosion 50 times from different angles on the news, your brain doesn't register one explosion shown 50 times. It registers explosions are happening everywhere.
It skews your reality. You think the world is fundamentally unsafe, even if the actual conflict is thousands of miles away.
And social media acts as an echo chamber for this. The algorithms feed you what engages you, and fear is the most engaging emotion we have. So you get into a feedback loop that spikes your cortisol even further.
And all of this leads to what the source calls the processor analogy. I loved this comparison because I feel like this happens to me constantly.
It's a brilliant way to visualize it. Think of your rational mind, your prefrontal cortex, as a computer processor with a limited amount of RAM.
Okay.
Under normal conditions, you have plenty of RAM to do complex portfolio rebalancing, calculate valuations, check your asset allocation.
Yeah.
You're running smoothly.
No lag.
But during a war, your brain is running these massive background programs. Threatassessment.exe, worryaboutfamily.app, news monitor, inflation panic.
And those are heavy programs.
They're resource hogs. They use up 90% of your RAM. So you have almost zero processing power left for complex financial decisions.
So when I'm staring at my portfolio during a crisis and I feel like I literally can't think, like I can't even do the math, that's a real thing.
It's real. You are cognitively maxed out. So what do? You default to shortcuts. You follow the herd. You do what feels safe. Not because you're stupid, but because you literally do not have the bandwidth to handle nuance.
That makes so much sense. It's like trying to run a high-end video game on a computer from 1995. It's just going to crash.
Exactly.
Okay, so this paints a pretty grim picture. We have a brain that wants to run, a herd that drags us with them, and a media environment that is just frying our circuits. Is there a solution? Or are we just, destined to sell low every time a tank rolls across a border?
The source is actually very clear on this.
Yeah.
You cannot defeat biology with willpower. You cannot just decide to not have an amygdala.
So just stay calm is bad advice.
It's useless advice. It's like telling someone in the middle of a panic attack to just relax. It doesn't work.
Yeah.
The solution is systems over willpower. You have to make decisions before the conflict starts.
Pre-commitment strategies.
Yes. The source outlines 3 big ones. First, set rules now. Define exactly what percentage drop you will tolerate without acting. Or even better, define what you will do if it drops.
Like a written contract.
Literally write it down. If the market drops 20%, I will not sell. I will rebalance. Sign it.
So when the market drops and you're panicking, you look at the paper.
And the paper says we do not sell. It outsources the decision to a calmer version of yourself. It sounds simple, But seeing your own handwriting can break that cortisol loop.
Okay, what's the second strategy?
Automatic rebalancing triggers. Set it up so it happens without you touching a button. If stocks drop, the system automatically buys more to get back to your target allocation.
This removes the emotion entirely.
It removes the physical act of clicking buy when the world feels like it's ending, because clicking that button is psychologically incredibly difficult. If a robot does it for you, you don't have to feel the pain.
And the third one?
The do-nothing checklist. Or you could call it the friction strategy.
I usually think of friction as a bad thing. We want things to be easy.
Not in a crisis.
Yeah.
In a crisis, you want speed bumps. The rule is, before you make any trade during a high volatility event, you have to force yourself to wait 72 hours.
A cooling off period.
Exactly. Or you have to write down your reasoning. Or, and I think this is the best one, you have to explain your trade to an accountability partner.
Like your spouse.
Your spouse, a friend, your financial advisor, someone. Because imagine having to say this out loud, honey, I'm going to sell our entire retirement fund because I saw a scary video on Twitter and I'm panicking.
Yeah, when you say it out loud, it sounds ridiculous.
Exactly. The act of explaining it forces the prefrontal cortex to turn back on. It interrupts the amygdala hijack.
So we're basically just tricking our brains into slowing down.
We're building dams to hold back the flood of cortisol.
And I think an important part of this solution the source mentions is simply recognition, just knowing we aren't crazy.
Yes. The goal isn't to not feel fear. That's impossible. If a war starts and you don't feel fear, there's probably something wrong with you. The goal is to recognize, oh, my heart is racing and I want to sell everything. That is my amygdala talking. That is a chemical reaction. That is not market insight.
It separates you from the biological reaction.
Correct. It's about understanding that your intuition, which is usually pretty good in social situations, is absolutely toxic in financial markets during a crisis.
So as we wrap this up, the source leaves us with some pretty heavy, uncomfortable truths.
The hardest lesson in the text is this. The best time to buy is usually when your entire nervous system is screaming at you to run.
That is such a tough pill to swallow. I mean, it is physically painful to buy when the chart is going straight down.
It is. It feels reckless. But the text poses a defining question. Are you trading to feel safe, or are you investing to build wealth?
Because during a war, those two things are opposites.
They point in completely different directions. If you want to feel safe, you follow the herd, you sell, you go to cash. You will feel safer. But you will likely destroy your wealth. If you want to build wealth, you often have to do the thing that makes you feel incredibly unsafe.
It really just comes down to preparation beats prediction.
That's the bottom line. You can't predict the war. You can't predict exactly what the market will do day to day. But you can predict your psychological reaction to it. You know you will get scared. You know the news will be terrifying. So build systems for that.
It's empowering in a way. You stop trying to outsmart the market and start trying to outsmart your own biology.
Which is the only thing you actually have any control over.
I want to leave our listener with a thought to mull over. We've talked about how our brains are designed for survival to keep us alive. And we've talked about how survival in the market often means doing the exact opposite of those instincts.
Right.
So, is successful investing actually an act of defying your own biology? If being human means running from the tiger, are the best investors the ones who can most effectively ignore their own humanity?
That is a profound question. It suggests that wealth generation is, in a way, almost unnatural.
Something to think about the next time you feel that urge to hit the sell button. Thank you for listening to this deep dive into the psychology of wartime investing.
Thanks for having me. Stay rational out there.
See you next time.